What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So far, I made $3,947.82 this month. I do have some pending income coming in. I also have an estimated income of $7,502.26. That is not guaranteed. But I will say this past month, I made $7,069.12. That was all reinvested into my dividend portfolio. So recently, what I started adding is business development companies. If you watch my previous video, I showed you which BDCs I'll be buying. But what I'm going to do, and I'm going to show you this video tomorrow. This is why you need to hit the notification bell so you don't miss future videos. And I show you my dividend investing strategy, what I have planned. I'm going to be hitting dividend ETFs and ETFs that have really good return on capital and monthly distributors with a pretty decent schedule too. So I'm going to show you my strategy tomorrow with implementing the dividend stocks and what I'm doing. But right now I'm going to focus on the 5 dividend ETFs that I really like, and I'm going to be buying each month. So even though I can get rid of a section of the pie, this still needs to be added to my portfolio to really distribute some high income firepower. High yield, high income, pretty stable ETFs, well-known ETFs as well. So again, if you're new, hit this notification bell so you don't miss future videos, smash that like button. Let's check out these ETFs right now. The first one I really like and I'm going to be buying consistently is the Goldman Sachs NASDAQ 100 Premium Income ETF. There's a few things that I like about it that I'm going to go into detail. So one of its objectives is to seek current income while maintaining prospects for capital appreciation. So we have monthly distribution. We have equity exposure with lower volatility. So it provides equity exposure to the NASDAQ 100 index and dynamically sells call options, allowing for participation with rising markets and potential outperformance in negative to flat markets. And it's also a diversified source of income. So another thing is it has a gross expense ratio of 0.35%. So the expense ratio is not too high, which is attractive. Since inception of 2023, if you put $10,000 into this, it is right now $18,599.47. So that is one thing that is quite impressive. Now, there's no guarantees, but again, that's a good sign that the NAV is stable and increasing over time. Its top holdings are NVIDIA, 8.03%, Apple, 7.93%. Apple's been doing really well. Amazon, Microsoft, Micron Technology, Alphabet, AMD, Meta Platforms, Tesla, Broadcom, and many others. So that is pretty strong, and it's 45.60% of the total portfolio. Even better is we see a distribution that has been increasing over time. So you see 11/3/2025, it was 47 cents, and now it cracked to 51 cents. I didn't round, but it is going up. So that is promising with the Goldman Sachs NASDAQ 100 Premium Income ETF. That is one that will be added to my arsenal in this pie section. I already have shares of it, but I'm going to be continuously buying that for a long time. And I'm not going to be, and this income will be good to also buy dividend growers. This income will also be nice to live off of passive income in the future. So this will help create the dividend snowball effect. Now I'm going to jump to the next ETF. The next one is the TappAlpha Innovation 100 Growth and Daily Income ETF. This one has excellent distribution. It's a deal right now at $26.43. And again, the NAV is stable. The NAV is up there. And since inception, it's actually up 5.72%. I'm going to go a little bit more in detail with them. So the TappAlpha Innovation 100 Growth and Daily Income ETF seeks current income while maintaining prospects for capital appreciation. The fund's secondary investment objective is to seek exposure to the performance of the NASDAQ 100 index. So we have a few things that we need to go over. Distribution rate is nice. It's 17.10%. Now we do have a little bit of a higher expense ratio of 0.83%. You have to be aware of that. Now some pointers that I'm going to bring up here. The return of capital for the most recent distribution was 0.96%. So again, I'm not giving tax advice. I'm not giving financial advice. Again, this is for entertainment purposes only. If you need to go for that, go find a financial advisor and tax advisor. My channel is for entertainment purposes only, but I like that the return of capital is 96% for the most recent distribution. So we have some objectives, growth and income. So we have growth. Okay, it's direct exposure to the NASDAQ 100. It provides income generation, maximize time decay. So that means by writing call options each trading day that expire the same day, TDAQ seeks to capitalize on the rapid time decay inherent to ODTE. Has a reduced time risk and flexibility as well. Now we have a pretty decent distribution in the 30s, the high 30s. So see what happens when the market gets a little bit better with the distributions, but so far the trends are pretty good, consistently in the high 30s. Hopefully, and don't quote me on this, this is just looking at trends, but hopefully when the NAV goes up, we can see a better distribution. And again, look at the return on capital that is really high, sometimes in the 100%, sometimes in the high 90s. And just be aware that this follows the NASDAQ 100 ETF. It's 99.85% of its portfolio. So it basically has holdings at QQQM. QQQM is part of my growth portfolio as well. So QQQM does well, this goes well. That's what it follows. Let's jump to the next ETF. This is another attractive dividend ETF, the Amplify CWP Growth and Income ETF sitting at $29.48. Now, since inception, we have some very good NAV. It's 17.97%. It has been up, so that is quite impressive. It has gone up with its NAV. Things like Misty, Alti, their NAV has decreased, which is a big problem. But QDVO, we have a NAV that has increased. So we have a 10.69% distribution rate. There's growth and high income potential. There's equity exposure and lower volatility, and it's actively managed. And again, the objective and strategy for the Amplify CWP Growth and Income ETF is an actively managed ETF that seeks to provide capital appreciation and secondarily high current income. QDVO consists primarily of large cap dividend growth stocks and is designed to offer high levels of total return on a risk adjusted basis. So be aware that it has an expense ratio of 0.56%. That's not bad. The selection methodology, growth equities, sector allocation, security selection consists of 20 to 40 stocks, which are screened through their protocols, and tactical covered call writing. Its top 10 holdings are NVIDIA, Apple, Alphabet, Amazon, Microsoft, Broadcom, Tesla, Meta Platforms, Eli Lilly, and AMD. Those are really good growth stocks. Tesla and Meta sometimes are a little up and down, but the majority of the stocks appear to be doing really well against the S&P 500 as well. So here's the thing too. There has been an increase in the distribution over time. So potentially, if things go well, this will go well. So yes, it did go down a little bit on 6/30/2026. The market was a little iffy, but you see a distribution that has increased over time since the start of January 2026. So that's one thing that's very attractive about them. Now I'm going to jump to the next ETF. This is another one that has done well with its NAV, the Kurv Technology Titan Select ETF. The symbol is KQQQ. Now this one is quite unique, which I will jump to on their website. So this has a little bit of a higher expense ratio at 1.12%. Its goal, it provides a targeted exposure to the top technology companies. We have an opportunity for growth and income. So seeks long-term growth while generating monthly income through actively managed option strategies. And it also offers some tax efficiency. So we have to be aware of that. Make sure you read that to check that out. So there has been a little slight decrease in the distribution, but depends on the market. So again, right now the market's very volatile, but the distribution is pretty nice. And yes, it did go down, but this is something that I'm going to hold on to because it has some pretty good holdings in it. It has Alphabet, Amazon, Broadcom, Intel, Meta Platforms, AMD, and Apple. So it's a little bit aggressive. And yes, the market's down, but being aggressive is a risk, of course, but there's a higher risk reward potentially with that. So yes, the NAV is a little bit down, but the distribution, hopefully it will go back up. There's no guarantees. But I like this one best. The best one right now. It's one of my favorite ones. This one has done extremely well with its NAV. The Overlay Shares Large Cap Equity ETF. OVL is the symbol. This one has done very well against the S&P. Its goal is to kind of keep in line or beat the S&P 500. The crazy thing is it has a distribution rate of 10.28%, and it's 5-star rating by Morningstar. In order to be a 5-star rating by Morningstar, you have to be pretty good. So that says something right there. And since inception, it has beaten the S&P 500. That is quite impressive. As you can tell, it has a lot of shares of VOO. So pretty much if VOO does well, it does well. Gee, is the S&P 500 done pretty bad in the past 10 years? No. The good thing about the S&P 500 is if you don't qualify to be in the S&P 500 still, you're booted. So there have been some top companies that were in the S&P 500 that were booted out because they didn't have the standards 10 years later. There's a lot of companies that are in and out. And if you don't have the standard for the S&P 500, you're out. That's the really cool thing about the S&P 500 and why it's done really well. And the most impressive thing is the distribution that has increased over time. So it started to become a monthly distribution. So you'll see that over time right here, things have adjusted. And now the distribution is almost at 50 cents per month. Almost. And it has a really good return on capital as well. So these are the 5 ETFs that I'm going to be implementing in my dividend investing strategy. It's going to be a section. I'm going to go and dissect that a little bit this week. But these are my 5 ETFs. So we have GPIQ, TDAQ, QDVO, OVL, and KQQQ. I think KQQQ, if you can rank it from 1 to 5 in my list, I would say KQQQ is 5. Very aggressive. But these are some funds that's going to be long-term. These are going to be the ones that I enjoy the income on. When I start generating enough income and significant amount of income, what I may do is 100 of my dollars that I earn a week, I may throw that into my growth portfolio. So each week I'll throw 100 into the growth portfolio, my own cash, and then 100 from my dividends that I earn to kind of turbocharge my growth portfolio. And that way I'm only putting in 400 a month, which is not bad. and then having the other 400 just from my passive income, because I'm starting to get up there with my passive income. But these 5, I want to earn money all the time. And its distribution schedule is almost basically, and you can correct me if I'm wrong, but GPIQ is 1 month or 1 week of the month. Another week of the month is OVL. Another one is KQQQ. Another one is TDAQ. Another one is QDVO. So the distribution schedule is almost like you're getting a weekly distribution as well. And again, you can correct me if I'm wrong in that. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. And again, I have a disclaimer at the beginning of the video. Again, don't use my YouTube channel for financial advice or tax advice. Don't buy things because I buy things. I'm just being very straightforward with you regarding that. And you need to go to a tax advisor or financial advisor if you're trying to get tax advice or financial advice. Take care. Have a great Saturday.